it becomes harder to argue that it is a Ponzi scheme and a massive bubble when time and time again it has gone up and gone up more, and the people that keep holding long term are the ones that are better off than before. So I just find it very unlikely that it's going to take another 2-3 years for people to be convinced to jump in again. And mainly because a lot of these macro investors and long term investors, they're holding long term. They're not interested in just flipping.
Welcome back to The Breakdown with me, NLW. It's a daily podcast on macro, Bitcoin, and the big picture power shifts remaking our world. The Breakdown is sponsored by Nexo.io and Bitstamp and produced and distributed by CoinDesk. What's going on, guys? It is Friday, June 18th, and today I am super excited to share a conversation with Larry Cermak. Larry is the director of research at The Block and is just one of the most thoughtful observers of this space out there. One of the things that has been on everyone's mind is this bull market actually done? And part of why it's been on people's minds is that they had some idea that we were in a supercycle. Now, I've talked about the supercycle before and what I think is a misperception or mischaracterization of it as meaning up only. Today's show talks about what I actually think the supercycle theory is, which is really about shorter cycles. The idea is that there has been a break from the long multi-year bear market followed by a bull market prompted by the halving sort of cycle that we've observed the last couple times. Instead, we may be moving into something where there are multiple different types of catalysts, where bear and bull markets rotate on a matter of months rather than a matter of years. Larry and I get into why that might be, and in general, where he thinks the market is right now, and what makes it different than the last cycle. It's a really fun little conversation for your Friday, so I hope you enjoy it. Larry, welcome to The Breakdown. I'm super excited to have you here.
I'm really excited to be here as well. Hopefully it's going to be fun.
Nah, it's going to be fun for sure. So what we're here today to talk about is cycle theories, super cycles, shorter cycles, I don't know, whatever type of cycles we want to name and give a catchy name to. But let's start, I guess, with just, you've been tweeting a little bit about people asking you where we are in the markets and you basically throwing up your hands and saying, I don't really know, but here are some observations. So let's start there. I mean, where are we in the market cycle? What have you observed? Like, kind of what is your mental model of what's happening right now?
Yeah, so I mean, you kind of nailed it. I have no idea, and I think this is like a first time in a really long time where I really admit that I have no idea. Sometimes I think I know, and I'm totally wrong, but now I actually think I don't know, which I think is like somewhat unusual. But basically, the way I see markets right now is that there's a lot of uncertainty and a lot of things that haven't been figured out, and because of that, I can see markets going both ways, or just staying in the same, same kind of thing that what they've been doing for the last couple of weeks. And the reason is, basically there started to be some sort of weakness, right? Like the entire run last year started on the institutional narrative. You had MicroStrategy start allocate some money. Initially, people didn't think that was such a big deal, and now, then that evolved into Square as well, and then Tesla. And when Tesla finally allocated, the markets just exploded. And that made sense. It was a significant company, didn't really dabble in crypto and Bitcoin before. And ever since then, we've been kind of like waiting on the sidelines. And we've been talking to, Coinbase, NYDIG, the largest allocators, and they've been telling us, there are companies on the sidelines. They're going to come. It's a lot of them. It just takes a long time. And everyone has kind of been waiting for the last 6 months, and nothing has really come out of it. And so that narrative has gotten, slightly weaker. And then on top of that, like basically all the retail indicators that we've been watching, ever since Tesla news, every retail indicator in the world has gone up. And it has continued to go up until about, 3 or 4 weeks ago. And then now it's started to go down again. And it's decreasing, and, it's just showing that people are obviously leaving, the regular retail people. And so now we're in this weird market where there's a lot of uncertainty about, more companies allocating, retail people are leaving. And just because there's less demand to buy, it seems like, the market is kind of like going up and down. And then on top of that, you add, this uncertainty from China, then you add this like mystery of what will happen with El Salvador. And it's just a market where, Elon can tweet something and Bitcoin will go up by 5%. Another country in Central America can, do something similar to El Salvador, and we go up 15%. Then China can, announce that they're completely cracking down on mining, which they've kind of been doing, and then that they're cracking down on leverage and trading, and we can go down again. So I just don't know. I think there can be a lot of things that can happen, and I think everyone who's right now like using a lot of leverage and betting on either side is kind of silly because I really, really believe that no one really knows.
I feel like the sort of inarguable thing is that we have a total momentum stall out, and no one is willing to step into the void with like even if it's just some sort of attempt at a narrative. You know what I mean? Like there's no one who's saying this is the reason that new people are going to come in right now. I mean, El Salvador sort of creates the beginnings of a possible narrative, but there isn't. I mean, companies like NYDIG to your previous reference, like Coinbase, they're not out there screaming, just wait another 3 weeks and we've got more crazy things happening, right? It's kind of just like there's not a reason for people to jump in right now. And so everyone's kind of in wait and see mode.
Exactly. I think that's totally right. And I think it was kind of similar with MicroStrategy early on last year when people were like, maybe this is just one crazy guy, and then it evolved into something more. And I think that similar can happen with El Salvador. But for now, you're totally right. I mean, there really isn't anything that's kind of pushing the market up as it was before. And the strongest narratives are right now, I think, at the weakest, especially when Elon is kind of going around and screaming about, the environmental issues and then a bunch of other things. So I think that's totally right. And I think we're probably not going to find out for some time. And that's why a lot of traders are just taking breaks now because they're just expecting this to take some time. But yeah, we'll see.
So you are obviously one of the best out there at watching the signals inside the crypto markets, but how much do you think this has to do with larger macro unknowingness too, right? It feels like there's also kind of simultaneously this wait and see mode as it relates to Fed policy, to monetary policy, and questions of how long they can sustain zero interest rates and asset buys and things like that. I mean, do you think that's factoring into it at all?
Oh, absolutely. And we've seen that with gold, like basically breaking down over the last couple of days slightly. Silver has gone down. A lot of commodities are crashing over the last couple of weeks. So it's not just Bitcoin that's in this weird state of things. And then, I really believe that over the last 2 months, it was a lot of retail pushing the prices up, which wasn't the case before, last year and then early this year. And now because the retail has started to kind of leave and then, macro is in a lot of uncertainty. There's a lot of volatility in equity markets as well. I think you're totally right. We're probably going to find out at some point in the next few months. But for now, everything is kind of in uncertainty. And it's no different for Bitcoin and the crypto markets.
Yeah, I mean, and there's also the like much more basic it's summer and everyone just wants to be outside again thing going on too. But so one of the things that I wanted to, I saw a bunch of your tweets, and this is something that you and I had kind of chatted about, but I want to talk about what this cycle is, how this cycle is challenging our perception or our thinking about the cyclical nature of these crypto markets. So I guess just for a little bit of setup, how would you describe for someone who hasn't been here long, maybe who got in over the last, 6 months, 9 months or something like that, how would you describe kind of the previous perception of what the larger crypto market cycle was? And then from there, we can talk a little bit about how this cycle has challenged that.
Yeah, absolutely. So, I mean, previously, even before this year, crypto has been kind of performing in cyclical nature, and what that means is that, for a period of time, usually like year and a half, prices tend to go up, and then there's a correction that usually crashes prices by 70-80% for the next 2-3 years, and then we go again. And there's this notion that as more people join and as more people find out about cryptocurrency and Bitcoin, especially, some of them stay, but some of them kind of get discouraged by the volatility, and then we just keep going in these cycles where for a couple of years we go up, and then for 2-3 years we go down. And my theory for this market for what we're seeing right now is that it's not going to be the cycles are not going to be as long as they have been. Like basically the drawdown that we've had from early 2018 until basically last year, it was basically 3 years, and that seems quite unlikely right now for multiple reasons for me. The main one being that the infrastructure and the space has just gone much more mainstream than it has before. Now you have these markets; they're incredibly liquid. You have a lot of institutional buy-in, and these are not people, at least from as far as I can tell, that these are not investors that are investing with short-term mindsets. These are investors investing with long-term macro mindsets, and so you have buy-in from them. Now you have a country that has made this a legal tender, and everything has gone so much forward since the last 2 years, and it seems like now Bitcoin and crypto overall is just much more focused on actual usability versus just speculation. And it just seems very unlikely to me that all of a sudden, we're going to forget everything that has been done over the last 2, 3 years, all the new, all the new derivative markets, all the new liquidity that has come in, and all the new infrastructure. And we're going to take another 3 years to hibernate and build new stuff and attract new people. And another thing that I think is worth mentioning is that when we look back to 2017, the notion of that, Bitcoin basically was a scam or there was a Ponzi scheme was so strong, and a lot of people thought it was a massive bubble. And it becomes harder to argue that it is a Ponzi scheme and a massive bubble when time and time again it has gone up and gone up more, and the people that keep holding long term are the ones that are better off than before. So I just find it very unlikely that it's going to take another 2, 3 years for people to be convinced to jump in again. And mainly because a lot of these macro investors and long-term investors, they're holding long-term. They're not really interested that much in just flipping. And so I think that's the main reason. But I'm curious what you think as well.
Well, so I think that you're right to actually go back and look at comparison points to 2017, 2018 in terms of where the last bull run ended. And a couple things that stand out to me, and broadly speaking, I completely agree with you. That's why I wanted to have you on the show. So first, I think that because Bitcoin had such a major run up before, I think that we perhaps misremember why. There were obviously lots of people who were coming to Bitcoin specifically and getting excited about Bitcoin specifically, but there were also a shitload of people who were just buying Bitcoin so they could get in on crappy ICOs. You know what I mean? Like that,
Yeah.
A big part of the bid up of the price of Bitcoin was that there wasn't $100 billion of stablecoins out there that you could use to enter these coins. You know what I mean? Like you had to buy Bitcoin more or less you could buy Ether too, but Bitcoin was the trading pair. And so that was a huge force. And so a lot of those hands who held Bitcoin, they weren't convicted about it, right? They didn't have the same sort of theories or whatever. Right. Certainly not exclusively. I mean, tons of people came in during that cycle and got really into Bitcoin. But I think to your point, there is a much stronger raison d'etre, right, for Bitcoin, and the people who have come in have stronger conviction about it. So that's one part. Part two is just capital left in the system, right? When ICOs crashed, it was a total wipeout of absolute vapor. You know what I mean? And there is certainly some of that. I mean, a lot of that in the dog coins and things like that I think will be similar dynamics. But you really can't look at the crypto landscape in terms of where capital has been allocated and see it the same way. So many meaningful projects have raised a ton of money to build teams. They're longer term. Also, a lot of those teams have the experience of having lived through that, and they're doing treasury management differently, right? Like that first time, I remember being around in 2017, 2018, and everyone felt like the most brilliant Warren Buffett investor ever for how how rich they had gotten so fast, and they didn't think about moving to less volatile assets for their treasury. They didn't, you know what I mean? Like that. I remember treasury management conversations just barely starting in May of 2018 when it was already way over. So the thing is, I think that how that contributes to this sort of idea of shorter cycles is if you have more kind of intention, like the money that has moved into the space, the people who've been around a long time have higher long-term conviction, one, that's going to buffer things because it sets price floors and all that sort of good stuff. But two, if you have teams who are building things, particularly in like the DeFi space, around layer two and Bitcoin, whatever it is that they're building on, that have capital to weather storms, they create the next round of reasons to be excited to bring new people in. You know what I mean? And
Yeah.
and if they don't get wiped out, which I don't think that they are, you just have so much more actual capital to kind of drive into the next thing. I mean, there was really a very long-term dearth of capital. It was
I agree.
just watching hedge funds fall. So
Yeah.
So that kind of broadly, I think those two things are really different this time.
Looking for the best way to unlock your crypto's liquidity? Nexo.io is exactly what you need. Borrow against your digital assets at just 6.9% APR. Earn passive income with yields of up to 12%. And swap between more than 100 market pairs with the Instant Nexo Exchange. Try the Nexo Wallet app to get the whole 360 degrees of crypto banking. Get started at Nexo.io. That's Nexo.io to get started today. Secure, regulated, and reliable, Bitstamp is the cryptocurrency exchange of choice for more than 4 million investors and traders worldwide. Since 2011, Bitstamp has been a trailblazer in security, head of the class in personal customer service, and dedicated to making buying crypto fast and easy. Whether you are investing on our desktop platform and mobile app or trading on our speedy APIs, Bitstamp gives you all the tools you need to reach your crypto goals. Visit bitstamp.net to learn more. Bitstamp, for all the ways we crypto.
We talk to a lot of institutional investors at the block, right? Like our main product is the block research, and we talk to a lot of traditional companies, traditional VC firms, traditional private equity firms, hedge funds. And I mean, everyone would be quite surprised about how much capital there is on the sidelines still waiting to be allocated, like right now. And that includes even the crypto VC firms right now. Like I remember 2018 early on, the crypto VC firms like almost went out of business. Like they ran out of money really quickly and then had to do raises. Right now, everyone still has a lot of capital. All the VC firms and all the raises that I've seen recently over the last like month or something, they're not having trouble raising at all. So, I mean, that I think is also a massive difference. And I'm glad you brought it up, that there's just so much capital and so many teams building. And those teams will, like you said, start these new waves of interest. And I think, one of them will be the L2s on Ethereum. I think that is going to be an important development. And then, now it seems like there's also some wind blowing for the Lightning Network as well with El Salvador. So I'm curious what will happen there as well. But there's clearly a lot of development and a lot more focus on actual usability versus in 2017. It was all vapor, like you said. And now, of course, there are the dog coins and the meme coins, but no one really took that seriously. No one really thought that was going to lead anywhere. Whereas now you actually have legit projects like building and a lot of talent coming in as well. That's another thing that I've noticed over the last like 6 months. The talent that we're just getting just ourselves to apply for positions is absolutely ridiculous. And I did not see that in 2017 and 2018. Everyone was still skeptical, but now all of a sudden everyone's like, well, this might as well be the new paradigm. Like, I don't want to miss it. And a lot of really smart people are drawn to it. And I don't remember that to be the case last time.
No, I think that's right. In fact, it was hilarious. I'm sure you had the same feeling of, as things started to heat up this time, it's like, oh, look, people that I haven't heard from in 3 years who like magically decided that legal cannabis was their actual focus and that's their true passion in 2018 are now back because it's crypto finance that's their true focus. These are all reasons why why a bear market now is unlikely to last the same duration, right? There's all these sort of things waiting right in the wings on the other side that are potential sources for renewed momentum. I think in general, so obviously there's been a lot of talk of a super cycle, which I think has been kind of misunderstood as a concept to mean up only forever. And I think actually maybe this, like, I jokingly called it a shorter cycle theory on Twitter or whatever, but like, I think that this is actually, they're kind of the same theory. It's just a different definition, right? I mean, so what is like, what is your sense? So this cycle, obviously, you've kind of articulated why it's unlikely to be kind of a multi-year bear market. But in general, I think you obviously have, or it sounds like you have conviction that we're unlikely to see that type of long duration bear market just in general. Do you think that that's just when markets mature, they're not likely to have 3-year bear periods? And, or what is it about the market that makes you think that over the long term, we're likely to see shorter cycles as well?
Yeah, that's exactly right. I think as markets mature and as you kind of spread your bets a little bit more, it becomes just so much more unlikely that we're going to be, here for 3-year periods and 80% of all the people will leave and then we'll have the same thing again. I think what's just much more likelier is that there is going to be a period of pain. There's going to be a period of, let's figure out where the new money will be coming from. And as that kind of gets fixed and as the macro environment gets a little bit clearer, I'm just very convinced that, yeah, we might be able to see something like 6 or 7 months of true pain, and we can even go much lower than we are right now. But I mean, if we're here again in 2 or 3 years talking about how we're just starting a new bull market, I would be very disappointed. And I think I tweeted that as well, saying something like, it's either shorter term bear markets or it's just going to go to zero. And I really don't believe it's going to go to zero. There's just so much going on. So yeah, I mean, my guess would be that we have a period of like less than a year of kind of like uncertainty and not knowing where anything will go. But I would be quite surprised if we're here another 2 or 3 years and just kind of chopping.
Well, and I think maybe the flip side too, we, obviously because we were now watching, red lines and the number go down, we're talking a lot about the implications of on the bear side for kind of shorter cycles. But I think that you could probably argue, and I'm interested in your take on this too, that like we've already started to see the difference in the top of of kind of shorter cycles, right? In the sense that I think everyone had a perception that if this cycle followed past cycles as it related to the top, we would have to see some crazy parabolic move up over the course of a couple weeks, and we would only be at the highs for, a matter of a couple days. I think I saw someone who went back and looked, and it was like the average time in previous cycle highs for Bitcoin was like 3 days or something, and then it was more than 10% down. And obviously we were at pretty sustained levels around 55 to 65 for a very long time. And so everyone was like, oh, well, it can't be done, right? Because it's like, it hasn't had that pattern. Do you think that like on the reverse side, on the bull side, that we're also likely to see, less of the crazy run-ups and more kind of mature? I mean, it was still a big rise, but it wasn't 2017's December, right?
Yeah. I think that's totally right. I remember like 2017 when the top was hit. I mean, you couldn't even find a consensus number for what the top was because the differences were like 300, 400, $500. And that even back then there was a few percent. So back then it was just really crazy. And I think you nailed it. It's like right now everyone is trying to still compare it to the last cycle, which was basically only retail driven. And it was driven by complete mania over getting rich from ICOs and, from everything. And now we're not in this market. And I think you're totally right. Like we are probably going to see slower rises going up. I don't think even what we saw over the last, 6 or 8 months, that was basically a parabolic rise. Yeah, you're right. Like, yeah, it was there for a few months, but eventually it's just going to be slower and it's going to be kind of like pricing in things that are coming in versus just one massive repricing that we have once every 3 years. I think that's unlikely. And I think it doesn't make too much sense to compare everything to what it was before. Like, yeah, there are definitely parallels, but the dynamic is so different. The investors are so different. The banks are invested now. Before they were saying it's a scam, pretty much unanimously. So yeah, I would just take everyone who does that with a grain of salt.
One of the questions I wanted to ask is around DeFi. I think one of the things that people felt uh, almost robbed by is like, Bitcoin hit its top, ETH hit its top for like a minute. And then, but DeFi never had a chance to like really hit its top. At least that was the kind of broad public perception.
Yeah.
But I wonder if actually, if we like, when we have some distance from it, we'll actually start the clock on this bull market more around, April 2020, right? Like post COVID, and see the full run up, DeFi summer 1.0 into kind of Bitcoin's institutional narrative and rise as like that was the bull market versus kind of pinning it around the entrance of MicroStrategy in December when we actually hit that 20,000 number. I mean, what's your take on that? Were you surprised that DeFi didn't have kind of a chance to shine from a market pricing perspective post Bitcoin all time high? Or I'm interested in how you see that.
Yeah, I wasn't actually that surprised. I think the thing that drove a lot of the prices, other than Bitcoin, even Ethereum, in my opinion, was just retail participation and retail kind of anticipation. And it's relatively hard to sell DeFi to someone who isn't interested in finance and like who's just a normal person like trying to invest in something. Like I think there are a few things that people like to invest in. One is memes, and DeFi really didn't have good memes at all. Second one thing is like actually you have to have some sort of narrative, right? Like if the narrative for DeFi is that it's a productive asset and you can use it to like lend money, that didn't work for retail because transaction costs like $150 for one at the top. I couldn't tell my friend who invested a couple $1,000s to go use Uniswap because he would burn 10% of the entire amount that he invested in one transaction. And I think that was really the biggest problem, is that it was it was not communicated clearly, and also it was just not ready for retail participation. And also the memes were just really bad. So you just saw a lot of people, go and rather buy a Shiba token because it has a nice dog there, versus buying something that actually could produce, some sort of productive thing, like whether that be dividends or whatever it is, like burns based on how much activity there is. So I think that was the biggest reason, and I think that could change in the future, where a lot of DeFi protocols that have become valuable last summer, they will learn from this. For example, one thing I don't understand is like retail is clearly attracted to really low units, right? And in DeFi, like everything, like you have something like Wi-Fi, and at the top it costs $60,000-$70,000. Like obviously people are not going to invest, and then obviously you're seeing all these meme tokens with basically trillions in tokens and supply just to trick people into investing. And I'm not saying like DeFi protocols should trick people, but they should communicate, and they should kind of get the narratives a little bit better than just saying, oh, it's a productive asset. It acts like equity. You should invest. Like 20-year-olds don't care. They care about what's gonna make them some money. They care about the narrative, about the meme. So I think that was the biggest reason. But I mean, you're totally right. Like last summer, it was basically a DeFi bull market. It was absolutely crazy how many people got rich just on buying early and then holding for some time. But yeah, a lot of people are wrong. A lot of people thought that after Bitcoin runs up, there's going to be basically the capital will move from there to DeFi, and that hasn't happened.
Do you think actually this is something that I've thought about a lot? Like DeFi has weirdly, through its inaccessibility, through its barriers to entry, kind of allowed itself to grow in this crazy sandbox without a lot of pain to people. Like retail hasn't gotten burned on DeFi, largely because they haven't come in, but it means that it's pretty much only people who understand the risks.
Yeah.
And I think, to the extent that you see regulatory risk in around DeFi or anything like that, one of the strongest arguments probably I think against that is like, look, there's nothing approximate to ICOs where Korean pensioners are getting burned on crappy tokens that were out shilling them. Like it feels like it's probably like net much better for DeFi in the long run that it has had this long incubation period with sophisticated investors.
Yeah, I agree, and I think I think this is going to be like a little bit similar to infrastructure for Bitcoin and for other cryptocurrencies, where it's quite likely to me that some fintechs and some financial businesses will actually implement DeFi passively for users, and for example, let them collect yield that they normally wouldn't be able to get in a traditional financial system. I think that's more likelier, where you'll have some sort of like a guarded system where you have passive and active strategies in DeFi kind of done for you without you having to understand what's going on in the background. But there's clearly a problem in kind of communication, problem in just letting more people to try this thing, and I think we'll get there with L2s and with more L1s kind of trying to compete with Ethereum.
Super interesting. I mean, I feel like we need to like come back to this in a few months and see how it's played out. But I guess one last question for you is kind of, as you survey the risks out there, right? Things that could make bear markets more prolonged, things that could drive the markets lower, all the different types of FUD. What do you perceive as the actual most, is there anything that actually concerns you versus is just another FUD to get through?
It's a good question. I think the environmental kind of whatever you want to call it, environmental concerns. I think it's more serious than people think, and not necessarily because I agree with it, but because it's just very simple to understand. It's like a super simple thing to sell to people: is that Bitcoin is destroying the environment, Bitcoin is helping, contribute to the global warming. And we start seeing politicians and people that normally are against Bitcoin just start using that argument more strongly. And I think like someone like Elon Musk, like allocating more than $1 billion and then questioning this himself, that hasn't helped a lot. And then so I think that could be a strong thing that could potentially like start more regulation and start more things that wouldn't necessarily like reflect favorably on the prices. So I think that would still be my biggest concern, is that this is something that's still relatively misunderstood and that people don't really actually spend time on understanding this in more depth. And I think it's kind of silly in that there actually really isn't any kind of like serious research that has looked into this exactly, like how many renewables right now are being used, like what's the miner makeup, like everything is outdated, and all the numbers that I see cited constantly, like the 40% number that 40% is coming from renewable energy. I would guess it's much lower than that, and so I think that would be my biggest concern, is that this is going to be something that politicians kind of really grab and try to like regulate mining and regulate Bitcoin in a way just because they kind of misunderstand the issues.
I mean, testament to that argument is how aggressive the rejection of NFTs from some circles were because of proof of work.
Exactly.
Like that was like I did not have on my bingo card activists shitting on the first thing to actually pay artists in about ever because of environmental concerns. That was crazy to me.
Exactly. I had the same exact reaction. And then people like misquoting some of the numbers, like saying that one NFT transaction costs this much and whatever, right? Like this much, it destroys the environment this much if you just buy one NFT. Like, it's just crazy how easy it is to spread information that is not based in facts. And people clearly get emotional around environmental concerns. And so I think I would still be worried the most about that. And just about someone overreacting to an issue that really would be hard to regulate, honestly.
All right, Larry, awesome to chat. Shorter cycle theory. We're going to come back in a couple months and see where we are. Hopefully we're all getting rich again, and we can triumphantly say we were right. It was a shorter cycle. but that, I guess that necessarily means that the top will also be shorter. But either way, I appreciate you hanging out. Always great to chat to you, man.
Yeah, thanks a lot. And I'll definitely be happy to revisit this.
The four most dangerous words in investing are "this time it's different." Still, I think when it comes to crypto markets and this bull cycle, this time it's different. There are new sets of actors, new catalysts for people joining, higher conviction around the assets that exist, more reasons, in other words, for bearish downturns to be less pronounced, less long-lived. The flip side, as we discussed in the show, is that the tops might also not look the same way that they used to. Ultimately, only time will tell, but I hope this show gave you a different way to look at what's been happening and where we are. And like I said in the conversation with Larry, we'll check back in a couple months to see if shorter cycle theory is really a thing. For now, guys, I hope you have a great weekend. Until tomorrow, be safe and take care of each other. Peace.